Good afternoon, ladies and gentlemen. Welcome back to the 21st April weekly market review. Today I have with me Mr. Gerald. How are you, Gerald?
Hi everyone. So we just had a long weekend break. Managed to catch some rest over the weekend. But we are in the midst of a very busy result season. So things will probably pick up over the next few weeks as we go through the first quarter earnings season.
Indeed, I hope everyone had a good rest as well over the Good Friday, a long weekend. But of course, things are still developing in the markets. We completed the first full week of the earnings season last week. We saw the bank's performance, which came in above expectations, but there were also some misses like United Health, which declined 22%. And of course, the whole market, global markets are still pressured by Donald Trump tariffs and some of his comments like firing the Fed Chair Jerome Powell. So markets is still very choppy right now. So I'll let Gerald take you through some of the developments.
Sure, thanks, Sunny. The usual disclaimer that today's sharing is for informational purposes only and should not be taken to be financial advice. We have an upcoming Ask SIAS session for SIAS members. This happening on Wednesday at 7 p.m. So if you'd like to join, you can register via this QR code, and the registration closes tomorrow on the 22nd of April. If you find the weekly market review helpful, do leave us a review on Google. And if you'd like to join SIAS as a member to access various online resources, as well as investor education programs, you can go to the website sias.org.sg/membership or scan this QR code. So there are still many different drivers of the market, and that has led to a mixed performance in the past week. We saw the S&P 500 was down by 1.5%, now back to below the 5,300 levels, while the STI delivered a strong performance, up 5.6%. So what did we see in the past week? Effectively, it was a normalization of some of the volatility in the previous week. We see that in terms of the stock market, where the S&P 500 had some pullback following the strong performance in the previous week. And we also see that in the bond market. So if you recall the weekly market review in the previous week, we mentioned that we'll keep a very close lookout for the US government bond market, given the spike in the 10-year government bond yield in the previous week. So what have we seen in the US government bond market in the past week? We have seen some moderation in the bond yields. So using this 10-year government bond yield as an example, it went up to as high as 4.5% in the previous week. But with the easing of some of the concerns around the tariff, we have seen that normalizing to about 4.2% as of Thursday. So likewise, we see this effect in the one-year government bond yield, effectively easing slightly over the past week. Likewise, we see that in the Singapore bond market, this Singapore 10-year government bond yield. We also saw this spike in the previous week following the trend in the US market. But with the normalization of the conditions, we have seen the 10-year government bond yield in Singapore coming down slightly as well. Okay, so that might be seen as a more positive sign in terms of that the government bond yields have not continued to move up because that may potentially create some stress within the financial markets. In the Singapore stock market, we saw that the STI performed very well last week, effectively bouncing off the sharp correction that we saw following the announcement of the tariff. Okay, and in terms of the stocks that did well, we've got Mapletree Logistics Trust, Frasers Logistics and Commercial Trust. Those are two logistics REITs that we talked about in the previous week's weekly market review. And we have seen some recovery in terms of their share prices as the bond yields move down, as well as with the easing of concerns around the demand for logistics assets. We have also seen some bounce in the bank share prices with UOB up 7.2% and SGX also up 8.2%, with the perception that the increased volatility in the market will lead to more trading volume and that will then benefit SGX. Okay, in terms of the worst performers, actually most of the STI stocks saw gains in the past week. There was only one stock that was down, which was Wilmar, down by 1.6%, because of the trade tariffs, leading to uncertainty around its business in China. But apart from that, some of the other stocks that did not see as strong gains, including the property counters, UL Hong Kong Land, actually became then the worst performers on the STI. So in Singapore, we have started to see the start of the earnings season. We've got a few REITs that have started to report their earnings. And last week, we have got Keppel DC REIT reporting their first quarter operational update. So we saw here in terms of Keppel DC REIT share price, it did well in the later part of 2024, together with the announcement of 2 data centers in Singapore. Saw the correction in the earlier parts of April, together with the sell-off with the trade tariff. And we have started to see some bounce here, back to about $2.03 per share. So just as a recap of Keppel DC REIT, following the completion of the 2 data centers in Singapore, it has now got 24 data centers across 10 countries, with a total asset under management of about 4.9 billion. So like we see here, the bulk of the assets are in Asia Pacific, particularly in Singapore, which now represents 66.3% of their asset under management. Apart from Singapore, it's got significant data center assets also in Australia, China, Japan, as well as in Europe. So what did we see for Keppel DC REIT's first quarter earnings? We saw an increase in the gross revenue as well as net property income. The net property income actually rose by 24% to now 88 million from 71 million in the first quarter of 2024. So this was partly driven by the acquisition of the 2 data center assets, which helped to lift the net property income. What's also very interesting to me from this set of earnings is that if you have been following the REIT earnings, we have always been talking about the finance costs going up with higher interest rates. But as the Fed has started to cut interest rates since September last year, and the interest cost has actually started to come down for some of the REITs. So we see here in terms of the finance cost for Keppel DC REIT, 12.5 million in the first quarter of 2025 versus 13 million in first quarter of 2024. So that is really starting to benefit the REIT in terms of lower finance costs. So with all of that, we saw the distribution per unit increasing 14.2% to 2.503 cents in the first quarter of 2025. So one of the strengths of Keppel DC REIT is that the portfolio occupancy remains high. It was 96.5% in the first quarter of 2025. And they also saw positive portfolio reversions of 7% in the first quarter of 2025. So apart from the contributions from the 2 data center assets in Singapore, the existing portfolio also continued to see good occupancy as well as positive reversions. Okay, so if I were to look at the balance sheet of Keppel DC REIT, it's got a low leverage level of 30.2%. So that provides it with headroom should it want to be pursuing further acquisitions. Okay, if I were to look at the interest coverage ratio, 5.8 times. So once again, that is a very healthy level compared to the MAS requirements in terms of the interest coverage ratio. So as part of the requirements, they have also started to report how various sensitivities towards changes in its earnings as well as interest rate will affect some of the interest coverage ratio. And we see that even if there's going to be a fall in the EBITDA by 10%, even there's going to be 100 basis points increase in the interest rate, the interest coverage ratio for Keppel DC REIT remains very comfortable. Okay, so that was one of the first earnings that we see for the Singapore results season. We go into this week with even more companies reporting their earnings, and that will include Mapletree Logistics Trust on 23rd of April. We have got CICT, Mapletree Pan Asia Commercial Trust on Friday, 25th of April. Okay, in the meantime, we have got a 6-month T-bill auction in Singapore. And given that we are coming close to the end of April, we also have the SSB application closing date on the 25th of April. And last but not least, if you are following the US market, we've got Tesla earnings that's coming up on the 22nd of April. Okay, so a busy week ahead after the long weekend that we have enjoyed. And with that, I'll hand over to Sunny for the technical analysis.
All right, thanks, Gerald, for that detailed presentation on some of the developments on the Singapore market. So I'll start with the Singapore market STI chart first. Indeed, so Singapore is a sort of a bright spot in at least the last week, I would say, because the global trade turmoil is still going on, and a lot of global markets, the US markets, were also badly impacted, like what Gerald presented earlier. The US markets were down on a weekly basis, but STI managed to jump more than 5% last week, recovering from the 8.9% drop the previous week. So we have more or less recovered about 50% of the drop that we saw in the last couple of weeks. And today, Monday morning, we are also seeing close to a 1% sort of a jump, and being pressured down by the green line that you see here, which is the 20-day moving average. Okay. So on the indicator-wise, you can see that the MACD has turned positive. This is an indication, a confirmation that we are now going back into an uptrend. So although there were critics that some of the technical indicators are actually lagging indicators, it may be a lagging indicator, but at least it gives you a confirmation of where the trend is likely going to be headed in the near term. So with MACD being positive right now, the STI should be likely on its way up again. We have also crossed above the long-term moving average, which is the key level that we are looking at last week, the 200-day moving average at 3,667 points. As long as we stay above this level, 3,667, the recent rebound last week that we see will still be intact. So this is two technical indication that STI has sort of a bottom out in the near term already, and we are now looking for a rebound, hopefully to retest the high that we saw in March, which is around the 4,005 points level. But the immediate resistance will, of course, be the blue and the amber line that you see here, and around the level of 3,816 to 3840, 3,840 points level. This will be the first resistance that we are looking at for the STI this week. If we manage to breach above that, then we have a very good chance of looking at the 4,000 levels again. On the RSI, for the STI, the reading now has also crossed above the 50-point neutral mark, indicating that there is at least some positive momentum in the rebound that we see right now. So you can see that all the indicators are actually showing a positive sign that the rebound that we see last week on the STI index will likely continue. And hence, my target for the STI for this week and next will be around the 3,800 level to the 3,850 points level. So Singapore, as a safe harbor, would have this kind of a reaction when there are global trade turmoils going on. So this could have a place in your portfolio if you're looking to sort of build resiliency to your portfolio. Okay. Next, let me move to the US indices, which are all down on a weekly basis last week. So we can see that the Dow Jones Index was heavily impacted, at least on last Thursday, because there were some earnings miss, especially for the insurer United Health, which had an earning miss, and then market sell off that stock, which is the Dow components. The stock was down 22%. Okay. On Thursday, the Dow Jones Index was down 1.33%. So we are below all the moving averages down. And the MACD indicator, although it seems to have some kind of a positive reading last week, but then after all the comments from Donald Trump again, like the comment on actually there's news that Donald Trump and his team is studying the possibility of firing or replacing the US Fed chair, Jerome Powell. So that caused a lot of panic in the market as well, and hence the Dow Jones Index sell off, okay, correspondingly. So we are still seeing a very slight positive reading on the Dow Jones Index, the MACD indicator. So this very slight reading, coupled with the potential of the MACD line, likely going to cross down into below the signal line, leading into a possibly very high possibility of a negative reading this week, will indicate that hey, the uptrend that we saw last week was actually has run its course already, and market is now really looking for the next direction going forward. And looks like there may not be a lot of immediate catalysts. Of course, some of them could come from the earnings results, but we are not very confident there. Okay. And of course, this immediate support will definitely come on the low bound of the Bollinger Band at 37,600 points. That will be the immediate support level for the Dow Jones Index. With the resistance level, we are still eyeing the red line that you see here, the 200 days moving average at 42,205 points. RSI is also showing the reading of 39 below the 50-point neutral mark. So that means that the momentum has actually weakened already from last week, from the previous week jump. And last week, sort of a negative results sort of dampened the RSI momentum reading, and hence the Dow Jones Index is not in a very good territory or not having very good momentum right now. So for the Dow Jones Index, I would sort of wait for it to, I would expect it to come down further, closer to the lower bound or Bollinger Band, before considering taking any other actions. Long-term wise, we are still looking at the 200-day moving average at 42,205 points. Next, let's move to the S&P 500, which managed to eke out a very small gain of about 7 points on Thursday, but still clocked a negative week. We can see that the S&P 500 index is, of course, being pressured in the last few weeks by the 20-day moving average since the announcement of the tariffs. So that will be the key resistance level to watch out for the S&P 500 at 5,453 points. And the support will be at the low bound of the Bollinger Band at 4,979 points. So there's a good chance that S&P will be testing the 5,000 handle very soon, okay, just like what we saw in the early part of April. So on the indicators, you can see that MACD indicator has a positive reading, but looking at the trajectory of the MACD line and the signal line in the past couple of trading session, it seems that it is there is not much of a direction, because last week some of the earnings season news where the banks sort of have quite a good performance were offset by certain comments by the Trump administration, and of course some of the possible retaliatory actions that the US might take against the other countries like China. There were talks that tariffs could go up to 245%, which really doesn't make sense anymore if those tit for tat kind of trade war actions continues further. On the RSI indicator for the S&P 500 index now at 41, so it is still being pressured or put down below the 50-point neutral mark, meaning that any uptrend momentum now is actually in a very weak zone below the 50-point neutral mark, and hence there's a high possibility that the S&P 500 would likely be pressured downwards to retest the 5,000 handle or the lower bound of the Bollinger Band at 4,979 points. Lastly, on the tech-heavy Nasdaq Composite Index, so we were down slightly, down about 20 points last Thursday, and of course, just similar to the S&P 500 index, it will be pressured by the short-term moving average, the 20 days moving average, which is the green line that you see here. Anytime it challenges this level, there will likely be some kind of a selling pressure coming in, and that is around the 17,000 or the 16,955 points level right now. Immediate support level, lower bound of the Bollinger Band, 15,253 points, so 15,000 handle would likely be we have a high chance of looking at the 15,000 handle quite soon, which is about 1,200 points away from last Friday closing numbers. So looking at the indicators, MACD is showing a sort of a weakened kind of a momentum reading according to the MACD histogram. you can see that although we have a positive reading last week, but that momentum is coming down significantly in the past two trading sessions, and the MACD line and the signal line are moving in a parallel direction, meaning that there's no sign of where it could be heading next, and we are in a sort of a holding position right now, waiting for further catalysts or further directions from any announcement that may be coming up. The RSI at 41 is also weak, 9 points away from the 50-point neutral mark. So it's also going in a horizontal direction. So likely there is no indication of where the market will be heading. And being below the 50-point mark, it also shows that the momentum is weak right now. And hence there might be further selling pressure on the Nasdaq Composite Index to come down further. And one of the catalysts this week would be the Tesla earnings, which I'm not very confident because they have very strong competition with BYD. Hence, the numbers in vehicle delivery numbers might not surpass market or market expectations. Hence, that could also be a point that will push down the Nasdaq Composite Index further this week. So still a lot to look out for. Markets are still being pressured by US Donald Trump tariffs, and Singapore is still a bright spot with the recovery that we saw last week and continuation today. So do stay alert, but don't be alarmed, and look out for further news, and we will continue to update you here on the weekly market review. Anything to add, Gerald?
Yeah, so like you mentioned, we will look out for Tesla's earnings to determine the direction of the US markets. In Singapore, I also shared that there are quite a number of REITs and other companies that are reporting their earnings this week. So those will be things that I'll keep a lookout for to understand how the Singapore market will move going forward.
Yes, and if you have any questions to ask me, Gerald, and Mr. Benjamin Goh, you can join us for this Wednesday SIAS session where we will be answering some of your questions. Okay. And these are all the updates that we have this week. So have a safe trading week, and we'll see you again on next Monday in the next weekly market review. Goodbye.
Thank you.